It's Thursday, the 19th day in the month of October 2023. Good morning. Welcome to Business Morning. This is where you get 55 minutes of current and relevant business conversations. We'll do it right here, and I'm Ini John Mekwa. Let's get right into it now. We'll begin with what's happening in the global oil space. Prices fell today, reversing gains in the previous session after OPEC showed no signs of supporting Iran's call for an oil embargo on Israel, and as the United States plans to ease Venezuela's sanctions to allow more oil to flow globally. Brent futures for December fell 0.5%, that's about 43 cents, to $91.07 a barrel. U.S. West Texas Intermediate crude futures for November, which expires tomorrow, Friday, dropped 0.2%, that's about 17 cents, to trade at $88.15 a barrel. The more active December WTI contract is down 0.3% to sell at $87.05 a barrel. Oil prices climbed about 2% in the previous session on concerns about disruptions to global supplies after Iran called for an oil embargo on Israel over the conflict in Gaza, and after the United States, which is the world's biggest oil consumer, reported a larger than expected inventory draw, adding to already tight supplies. The Organization of Petroleum Exporting Countries, OPEC, is not planning to take any immediate action on OPEC member Iran's call, according to market traders, easing concerns over potential disruptions. Israel imports about 250,000 barrels every day of oil, mainly from Kazakhstan, Azerbaijan, Iraq, and African countries, according to analysts. There was also a pullback in prices as United States President Joe Biden's visit to Israel concluded without any further escalation in the Israel-Hamas conflicts. In the grain space now, Chicago wheat futures rose for the first time in 3 sessions on bargain buying on Wednesday, with corn futures following traders. According to traders' observation, wheat futures also gained a mid-session boost on rekindled market speculation that India, which is a leading wheat producer, may be tight on supplies. India raised the price at which it buys locally produced new season wheat by 7%. The country's information minister said that that's to encourage farmers to expand the growing area as New Delhi tries to increase production. Meanwhile, soybean futures hit a 3-week high early in the day, which also boosted corn and wheat futures as demand in the United States domestic market continued to underpin prices. Soybean futures trading was volatile, with most contracts turning down at one point as the soy meal market rallied in part on export demand and tight supplies. And on the news that United States exporters had sold 132,000 metric tons of soybeans to China for the 2023-2024 marketing year. Some traders are betting that seasonal price lows have been set and U.S. farmers are wrapping up their harvest. But growers have been showing hit or miss interest in booking new deals, even as cash prices for corn hovered around $5 a bushel and soybean prices around $13 a bushel in many areas. Instead, some farmers are betting that severe drought in parts of Brazil may help fuel a commodity price rally later in the season. And then the most active wheat contracts on the Chicago Board of Trade, CBOT, are settled up $9.75 at $5.80 for a quarter of a bushel. Soybeans closed up at $14.25 at $13.11 a bushel after rising earlier in the season to $13.13 a bushel, the highest since September 27. Corn settled up 3 cents to $4.92 a bushel. We come to Nigeria now, where the Acting Controller General of Nigerian Immigration Service, Adepoju Karo Wuraola, is asking the federal government and states in the coastal region to harness the wealth in the sea by embracing what the blue economy offers fully. The immigration boss made the appeal at a workshop on the blue economy with the theme, The Coastal States of Rivers State and Benefits of the Blue Economy.
The one-day workshop of the Blue Economy, which was well attended by top government functionaries, captains of industries, resource persons, officers of the immigration and other security agencies, is the first of its kind in Rivers State. Speaking at the workshop, the Acting Controller General of the Nigerian Immigration Service enumerated the merits and challenges that lies with harnessing the billions of naira that can come into the Nigerian economy from the exploration of the blue economy.
Under the leadership of President Bola Ahmed Tinubu, is looking critically into the benefits of blue economy. Is something to be very, very excited about. The ocean, which borders Nigeria in the southwest, is nature's gift to us. If properly harnessed, it will go a long way to boost the economy of this country. We have seen the strength, we have looked at the weaknesses, which include but not limited to piracy.
Governor Fubara, through his representative, affirmed he will implement recommendations made from the workshop while assuring the continuous equipage of the security agencies and the safety of the waterways for the blue economy potentials to be fully harnessed.
This one-day workshop with the theme, The Coastal State of Rivers State and Benefits of the Blue Economy, Stakeholders' Perspective, is indeed very apt, particularly with emphasis on the sustainable development of ocean resources by the state and federal government. I am delighted with the convocation of experts from the maritime sector. It is a welcome development because of its underlying opportunities, ranging from its green infrastructure in the area of renewable energy, maritime, tourism, offshore oil and gas, aquaculture, shipping and logistics, maritime, biotechnology, etc.
The Controller of Immigration Service, Rivers State Command, James Sunday, intimates that the workshop is made possible with the partnership of the Rivers State government. It is said that the blue economy provides 350 million jobs worldwide and can help provide employment for Nigeria's teeming youths. From Port Harcourt, the Rivers State capital, Deborah Abalama, Channels Television News.
Obviously, the blue economy getting a lot of attention, deserved, one might say, because, of course, it's now had for the first time in the country, or in a long time, has its own ministry, and we hope to make the most of it. But let's go to a pressing issue at this time in the country. Just this morning, a lot of people would have noticed fuel queues on your way, petrol fuel queues, and we've heard stakeholders saying the issue of FX. And then, of course, we know what's going on with major oil producers. We just read about the movement in oil prices. Let's try and find out what's going on right there and hope that this is not another long-term fuel queues at this time. Joining us for that conversation is a senior analyst, financial derivatives company, Mr. Clement Igbounugbo, joins us virtually from Victoria Island. Mr. Igbounugbo, thank you so much for your time. Now, do we know what's causing this? I thought, we're done with this, but obviously it's a temporal relief we got there. Do we know what's going on now?
Yeah, good morning. I think my guess is as good as yours. As at the time that the reforms began, the subsidy removal and all of that, and then we had that there was deregulation of the downstream sector. So I also thought that we have said bye-bye to long and terrible queues. But we've seen queues resurfacing in Lagos and other major cities in recent time. And that followed, I believe, is a kind of speculative move. Because remember that a few days back, the group managing director of NNPC said that NNPC is now the sole importer of PMS. And Nigeria is a PMS economy, so to say. And when he made that comment, market has already started reading into it that, that means that we are not going to have that kind of large supply as we're expecting, that given the fact that private players are giving a license, that is going to increase supply in the petrol space. And so that's speculative, because remember the uncodified rule there is that you buy on the rumor and sell on the news. And so the marketers began to hoard products in anticipation that it's going to you are going to have scarcity. But the biggest problem in it is, why are we going back to where we thought we've left? The group managing director was saying the reason why they returned as the sole importer is because the private players could not access forests, but they can create, in his word, we can create forests. And for me, it's not a good thing for NNPC to be the only organization that can create forests for the economy. So I think that issue of access to forests becomes a very big issue. But beyond even access to forests, is the fact that the global oil price has risen to around 90 from around 73 at the time that subsidy was removed. And exchange rate has moved, let me use the parallel market, from 760 at the time of the reform to over 1,000, about 1,010, 1,100 naira as at yesterday. The implication is that if the price of the pump price was 600 as at the time of reform, now it should be anywhere above that. And if we use the diesel price as a benchmark, which now is over 1,000, it means that the PMS could even be way above 1,000. But if the PMS is to be sold at 600, do you think the private players will be able to play? Even if they have access to forests, which market are they going to sell? Because they are going to get it at a landing cost that is higher than the market price. And so what we don't know is, what is the pricing scheme? What government is not also saying clearly is there a subsidy? Who is paying for the subsidy? How is the subsidy being financed or being paid for? And so all of these things that are shrouded in secrecy, lack of transparency, is really affecting the market. And I tell you, one of the new lexicon that has entered into the Nigerian macroeconomic evaluation is the petroflation. Petrol PMS particularly can lead to 5% increase in inflation in a year. And so if we have, now we know that whatever that happens to the PMS, because the price is no more controlled, but even at that, whatever we have seen it play, that whatever that happens to the PMS has tremendous impact for the household. The household is already squeezed, don't forget, at per capita income of 1,755 naira and annual cost of living of $1,755, annual cost of living at $7,400, the Nigerian household is already squeezed and on edge. And so if you're going to put in this pressure again on the household, that's going to be quite tremendous. And I think there's need for urgent attention to ensure that this does not escalate. And that's not going to be good for businesses because of operating costs and all of that.
Yeah, well, I think you said a new term, at least for me now, petroflation. I think that's one thing that's really hurting us. But as you noted, there are so many uncertainties. Are we paying subsidy or not? The private sector is supposed to be players in the petrol supply chain. For a couple of months now, we haven't really seen that. And we're still going back to the issue of ethics. You know, which, I mean, I don't know, is there a short-term solution to this FX issue? It's affecting everything in our lives, and that's just because our refineries are not working. I remember a promise from the federal government also that at least one of the refineries, which I think is the Port Harcourt, will be working before the end of the year. October is coming to an end. You know, there's so many uncertainties and promises that we do not see steps to actualization. There's the FX issue. Fine, the president has pronounced unification, but we see the gap still widening and the naira losing even more value. We saw on news yesterday our reserve has dropped even further. I mean, it just seems like so much being a Nigeria can be so stressful.
Talk is cheap, they say, and policy announcement is far different from policy impact. In fact, the gulf between the two is as a journey from here to Kafanchan. We have celebrated policy announcements, but we also need to see the policy impact. But you can't see all of this in it if we are not clear. The issue of transparency and believability of whatever government is saying they're going to do, because we're not seeing that consistency in all of those pronouncements or all of those announcements, and that's become a very big issue. In a look at FX, the quickest win is for you to come clean. If we don't know what the reserve is, the net reserve, because when the central bank is saying the moving average of the gross reserve, it means that we don't even know what the reserve is. So what is the capacity of the central bank to intervene in the FX market is unknown. There are many unknown. And so investors will not bring their money in. Remember that the capital importation report showed that Q2 capital importations plummeted by over 33%. That's huge, including even what we call hot money, the portfolio investment. Because investors will not bring their money when you have more than $6.8 billion of forwards that are not settled. When foreign investors have committed their Naira assets to the CBN to get dollars, and those Naira assets are held hostage, all right, and they can't get it. So who is going to bring the money in order for you to have that inflow? As of today, we don't have any plan to expand production around the export corridor. We don't have that plan. What are we going to export in order for us to get FX? That plan is there, is not there. But what surprised me most in it is that when I look at H1 2023 reports, I discovered that autonomous sources, FX inflow from autonomous sources is more than 60%. The CBN sources accounted for less than 40%. So it means that if we increase transparency, if we say we want to liberate the market, let's not do one and leave two. We are taking it in piecemeal without communicating the next step, and that's making it difficult for the market to read it out. So when we say we are doing willing buyer and willing seller, and we are not even sure whether it is free floating or managed floating, we don't know. And the next day we say, oh, we are lifting ban on 43 items, but we don't know whether we are going to pay the outstanding backlogs and all of that. Let it be clear. And I think as my boss had earlier solicited, that we should go to wholesale Dutch auction. Let's have this free play. Let's liberalize the market. And those that have FX that are holding it can bring it to all of these rules, restrictions, and all of that makes it difficult because people are afraid. They're not bringing out the FX. So those are people that are holding. Let me tell you, we have more FX that are not through the banking system than the ones that are through the banking system because people are afraid. They don't know what next. I can put it in the bank tomorrow and then there is a change of policy and I lose everything. And so I think the government needs to be clear, transparent, and be clear in communication and also be consistent in what it can do in the short run so that we can plug the low-hanging fruits.
I can confirm what you have said. Yesterday, I had a conversation with an individual that was wondering if he puts his dollar in his DOM account, if he'll be able to, access it. And there's a whole lot of uncertainty about that also because we know what the former CBN boss, did with things around that. That's on the one side. On the other side, at the just concluded IMF and World Bank meeting, what IMF said, we see the policy reforms, but it's not wholesome. So that's obviously, what you have also referred to.
Exactly.
We see this on this side, but we don't know what's going on this side. On a third front, the BDCs had even asked government that they want to be captured into the formal sector, into the formal calculation, because a lot of remittances from individuals doesn't get to the CBN. And as you noted, 60% of those are not captured by the formal market. So I think it just goes back to what the IMF said. Let there be a wholesome, inclusive reform and implementation of these policies, reform that we're working on.
Yeah, you are very right. In one of the professional platforms that I belong to, people were fighting the IMF. People become very IMF phobia. Once you are having a talk with IMF, they say, oh, that's going to be chaos. That's going to be trouble. But that is not all that. IMF is saying clearly what should be done. IMF will not come and do it. And what they're saying, like you rightly mentioned, is what we need to do. We need to be clear in our communication as to what we need to do, when we are doing that, and how we are going to get it done. There must be consistency in that communication. At the central bank, at the fiscal corridors, there must be that consistency. And let me tell you, Ini, one of the wrong assumptions we've worked with over the years is the fact that the CBN has to be the sole custodian of the FX. For crying out loud, the US dollar is a convertible currency and is tradable. And so if there's all this idea of CBN trying to bottle everybody in, we need to get it off the basket. If an organization or a company, maybe Shell, has FX to sell, they approach a bank and negotiate the terms of that deal and sell. And another person can come and have access to it. Okay, look at what happened when the CBN said people should not use their dollar balances as collateral. What people did is that, okay, they say, okay, we have had that. Now I can take my dollar balances from Zenith Bank and take it to a bank in the UK and get a bank guarantee from there and use it for collateral. Who is losing? We lost that liquidity. And so there must be thinking through in public policy so that we don't use one restriction and regulation to kill the gains we expect from long expected reforms which are really underway.
All right, we actually took more than we should, but I guess it's a pressing issue affecting everyone, and sometimes, really gets frustrating. But thank you so much, Dr. Clement Igbanugo, Senior Analyst of Financial Derivatives Company, for your time and your thoughts this morning.
Thank you very much, Ini. My pleasure.
Let's take a break now. When we come back, it's still about the macroeconomic factors in Nigeria. How it's affecting the real estate industry. We'll discuss that next. Welcome back to watching Business Morning right here on Channels Television. Now, the country has recorded housing shortage of about 20 million units, and that's supposed to head, of course, even more than that by 2030. It's supposed to get to about 30 million units. So obviously, this is something that should be done. And we've seen a lot of private developers, even seen some adverts of those companies, private developers, here on Channels Television. But now they are saying that the same issue we talked about, FX shortage, and some other harsh macroeconomic realities, they are slowing them down. But let's find out the reality of it now. Joining us from Kenya is Mr. Oladotun Oloyede. He's the founder and chief executive officer of Rollard Properties. He's also a real estate investment expert. He can tell us how to get this money and deal with the issues. So thank you so much for your time this morning, Mr. Oloyede.
Thank you, Ine. Good to be here. Good morning.
Good morning. So tell us how real the harsh realities in the country is affecting those of you in the real estate industry.
Thank you. I think the first place to start is to look at the inflation and what the effect has been on the property market in the last 1 year. And a couple of times people wonder what's the inflation. Inflation is when there's general rise in prices of goods and services, and there's a reduction in the purchasing value of the money. And majorly the causes of this is devaluation and the exchange rate, which is controlling almost everything in the market, and property market is not an exception. And right now, there's the effect of this is in two ways. The first one is on the developers, the private developers like me, and how has that affected our capacity to produce this property, to develop this property. And the second one is on the end users, the customers who buy these houses. How has this affected them? If you look at it from the developer's aspect, the cost of construction has gone up by more than 30% in the last 1 year because the prices of goods and services keep changing almost every day. You stock up today, tomorrow the prices has jumped up. And this has translated to increase in the cost of construction, meaning the landing cost of a house has generally gone up. And if you look at from the developer side, it's a no-brainer. It means the cost of purchasing a home for them has gone way high. And what you can buy with X amount last year, you need 2 times that X amount to be able to buy it this year. And if you look at all this data and all, and we talk about the housing deficit, you mentioned it that it's about 28 million, and that's even if you look at it from quantity basis. If you look at it from qualitative basis, it's way higher than that. If you begin to look at where people live and how people live, then the housing deficit will be higher than that. Our home ownership rate in Nigeria is less than 20% compared to Kenya, Ghana, and South Africa, who are already going around 50 to 70%. And mortgage penetration is less than 2%. So these are damning data, damning figures that if you combine this with the current market reality of the volatile exchange rate and the rising inflation, it just leaves us in a more damning place. But the question to ask is that, is it all doomsday for the property market? I would say no, because there are factors that keep driving the market. Number 1 is the population growth. Number 2 is urbanization. And number 3 is the rising middle class. Because at the end of the day, people need where to live. Whether they are buying or they are renting, you're not going to sleep outside. You need roof over your head. And these drivers make the market still a viable one. So the question is, how do we cope? What are the coping mechanisms and the solution to the problems that we find ourselves right now? If I look at this from a developer's perspective, I would say there is need for urgent intervention. There's need for more developmental funds. Government needs to step in. There's need for collaboration between the private sector and the public sector. Right now, most developers use commercial funding. Abandoned projects. There is need that Nigeria needs to produce 100,000 units of houses every year for the next 10 to 15 years if you're going to bridge the gap. And currently, the production rate is way lesser than that every year. And if you're going to bridge this gap, there's need for major intervention from government in terms of creating developmental funds that developers can access to be able to deliver these houses.
Yeah, well, I mean, when you say intervention, every sector needs intervention at this time. And, well, globally, governments are broke. They're facing a whole lot of, realities. So they were hoping that the private sector will actually bring the cash, the funding for all of this. So, I mean, you are investment experts. Where is the money that we can use to do? Government is broke. Let's start from there, at least in Nigeria. The issue of FX reserve and all others, inflation, it's a challenge. So where can we get the money from? What schemes or what can we do as attractions, to get private sector holds the fund at this time?
Yes. So when I say government intervention, you see, when there is so much uncertainty in the economy, it makes it difficult for investors to come in. So the major thing government needs to do, there's need to create a viable environment, a conducive environment for us to be able to, bring in these funds to be able to do this job. Right now, there's so much uncertainty around the exchange rate policy. Earlier on we talked about how a foreign investor can bring in their money and it's so difficult to get this money out. This uncertainty, when it comes to our policy not being stable, and we don't currently know what exactly is the exchange rate, what's the government going to do about it, what are they not going to do about it. This uncertainty makes investors very edgy. And it makes them, they're hesitant in committing their funds to the market. So the first thing government needs to do is to create an environment. In Lagos, for instance, you have a situation where government sometimes look like competition rather than regulatory body. So all these things where you don't know.
What do you mean by that? What could you explain that? When you say create environment, just give examples so people can picture it.
So for example, you looked about let's talk about our documentation policy. The cost of getting approval, the process of getting approval is very chaotic. It's not straightforward. These are some of the policies that create uncertainty, where that I can't just. For instance, I'm in Kenya right now. And in Kenya, you can easily just get a property brief, and go online right from your hotel and have all this thing figured out. You know the role of the government, you know the role of the private sector. It is very clear, it doesn't change. If you bring that to Nigeria, it's not the same thing. I can't just verify a document sitting in my hotel room. If I want to get my building approval, I need a whole lot of know this person, know that person. All these things are things that create uncertainty in the sector, and it needs to be clear. The policy, the processes needs to be clear. We need to know what exactly government is doing about it. You talk about private investors bringing their money and not be able to take it out. All these things need to change for us to be able to attract the right funding we need from the private sector.
All right, so that's where the government comes in, and obviously it's only the government that can control the policy and the environment. Now, we've seen President Bola Tinubu active and, showing signs the market loves him and expects him to be able to normalize things. I know that land, for instance, falls under state government. So do you have like a plan, something like that you think maybe a pronouncement and then the implementation that can soothe the confidence of investors and make them relax and, come into the real estate industry?
Yeah. I'm a big proponent on collaboration, really. I believe strongly that if fellow developers will come together and we'll put our, technical know-how and our resources together, it goes a long way to build the confidence of both the investors and the end users. Because when you see credible people coming together to do a project, because in a time of where you say government is broke, investors are hesitant, then collaboration is the way forward. And this is not a time where I want to do it on my own or they want to do it on their own. We all need to come together as a private practitioner in the sector to, let's take on projects. If you are indeed going to, I see this in a lot in the United Kingdom, where developers will come together to develop a particular location. And that sort of helps the financiers, the investors, to come and also fund those projects. And also sometimes government they don't have a chance. They also have to come into the project because a lot of people have taken the initiative to provide these houses. If we are indeed going to bridge this gap, there's need for collaboration among the private sector. And on the government side, if I may hide this, the mortgage penetration in Nigeria is less than 2%. It will be impossible for government not to be able to fund developers, provide funding for the developers, and also are not able to provide funding for the end users. And sometimes, even if the private sector manage to get this investment to build these houses, it will mean nothing if the end users cannot buy the houses. So our mortgage penetration need to get better. If the home ownership rate is going to increase, people will need to be able to access mortgage in a very easy way. And recently, the mortgage has increased. The amount you can access has increased from 15 million naira to 55 million naira, which is a very good one. But again, the process to accessing this fund, also we need to streamline it. There's need to, we have the Federal Mortgage Bank, we have the PMIs. Sometimes the gap between the two is also huge. These are some of the things that also we need to streamline so that people know, okay, I can access this mortgage. There's unification of rate, there's unification of interest rate on this mortgage, and people know, okay, these are the conditions. If I'm able to, at this age, this is the amount I can access. This is how long it's going to take me to pay it back. So all these things need to improve for the property market to get better.
All right, thank you so much. Collaboration between private sector players, a lot of them compete a lot. You developers, there's a lot of competition right there. So you need to break the line of competition and come as collaborators. And on the government side, I mean, mortgage is another issue we're going to discuss on the program sometime in the future. But thank you so much, Mr. Ladotun Oloyede, real estate investment expert, for sharing your views with us this morning.
Thank you.
All right, now let's head to the market and see how yesterday fared, beginning obviously with the numbers at the NGX. We see a positive marginal, though, movement in the market yesterday. That's how the market closed in Nigeria. I guess we should be happy for that, because if not, would have been in the negative, which unfortunately is what we don't want. So at least from Friday to Monday, I mean to Tuesday, sorry, I've been away, so I didn't get all of that. But I mean, I think for this week, we've had positive. It's marginal 0.04. The equity cap is added 15.29 billion naira and led it to 37. We're up from 36 is what we've had for a bit now. All share index at 51, but added 31.42%. And yesterday of interest to investors were the banking sector. Let's see the sectors. I'm sure we'll see that there's Zenith Bank added more than 1%. UBA also added, and then GT Co, you know, the full guys, the big guys right there. Seems to have a problem with our data right here, so I'll just do that myself. UBA, GT Co, Zenith Bank, they were the drivers of that, and we saw that it went up. That is when you talk about the banking counter gained yesterday and brought up that there. You see volume traded was up 5.2% to 397.56, valued at 4.70 billion, and exchange in over 6,000 deals. Sorry, just have to believe me. Okay, and GTCO was the most traded. Looking at the sectors, banking gained 0.7%. Insurance was also up. We know that it's like a new kid on the block. Insurance, 0.3%. Oil and gas, marginal 0.2%. And those were the consumer goods closed flat, industrial goods negative 0.1%. Market breadth yesterday, 19 tickers gained, 18 lost. Very slim right there. But let's have Abiodun Adedotun join us now. He's a trader, equities trader with FBN Quest, to tell us some of the things that happened in the market as well. Also, we saw Geregu's earning came in very impressive, its earning seasons. So, of course, we expect a lot of movement. But Abiodun, good morning.
Good morning.
Yeah, so tell us, we see that insurance seems to be a new kid on the block at this time, gaining some attention. It used to be so ignored before now, but we see it's gaining, and then expectedly, the most liquid counter also went up. But give us a general picture, and the line was so slim. 18 and 19 gainers and losers. But give us an overview of market trading yesterday.
Okay, thank you very much. Pretty much for the market rates for yesterday, investors have been moving ahead cautiously. Of course, everybody knows what's happening in terms of inflation and a whole lot of economic metrics within the country right now. So there's been a whole lot of caution, and as you'd expect, inflationary pressure will continue to make investor reprice assets, and repricing assets in the sense that balance sheet get bigger, earnings get bigger, products are completely repriced. Everybody try to get keep that margins very, very decent. And for the insurance company, I'm not pretty much surprised that it's getting attention right now. Of course, you'd recall that earlier in the year, the regulator, which is NICOM, gave a circular, in terms of adjustments of rates, especially when he talked about the comprehensive insurance and third-party insurance for automobiles. And there's been a whole lot happening in the sector, and it's not surprising that we are seeing a whole lot of investors looking at it. And coupled with the fact that there's been a lot of value, locked in there. These companies are sitting on a lot of cash, and maybe it's time to begin to sweat this balance sheet and bring better returns to investors.
Yeah, and then the earnings, Geregu, it's third quarter earnings. How much is that moving the market or moving investor sentiment? Geregu was kind of impressive, we see.
Of course, yeah, Geregu was impressive, pretty decent in terms of Geregu. The market appreciates the fact that a Geregu will come to list, and being the utility energy producer, it's not surprising seeing this kind of numbers, from Geregu. And you would recall that Geregu, I think, has gained over 200% over a year period to date. Investors will continue to look at it, looking at Geregu currently with PE at around 54, thereabout. Based on current run rate. It's going to be interesting to see where investors will want to continue to price Geregu, but there's a lot of value locked in Geregu because Geregu is more like a cash cow that will bring returns to investors in the long term.
So somebody was discussing this morning with that impressive outing from Geregu. Do you expect some activities around it today, or is it too late for investors to jump on?
Of course, the thing there is that investors would try to reappraise vis-a-vis the other opportunities in other spaces in the market. There's still a lot of upside in Geregu. I would not expect so much movement in terms of price appreciation immediately. But of course, Geregu is always for the long-term investors, and they'll continue to play there.
So how do you see the market closing today? Because, I mean, zero point
Positive.
0.4 is really, really slim. Anything can happen.
Positive. I think the market will close positive.
Okay, all right. We'll let you know. I mean, we'll all see if your prediction comes true. But thank you so much, Abiodun Adedotun, equity trader with FBN Quest.
You're welcome.
We head straight to London just before I get back to the city. See Juliana joining us this morning. Juliana, good morning. A lot of corporate news coming through from the UK this morning. Nokia said it's going to shed about 14,000 jobs. I wonder how many British workers will be affected in this.
Yeah, that's right. Good morning, Innie. We're not sure actually where this big action is going to come from, but certainly it will affect employees of Nokia in the UK because they've got about an 86,000 strong workforce. But it's been a challenging environment, and we've seen that from the latest update. Of course, they're not based in the UK, they're based in Finland, but when they did update their Q3 results to shareholders last week, it was very unimpressive. In fact, their revenue has plunged by about 16% and profits have declined 69%. So that's why we're seeing this morning the announcement of the fact that they're going to be letting go over 14,000 staff. According to bosses, this is going to save about $421 million US, and that's exactly why they want to do it right. And I think it's because of the fact that a lot of their business strategy over the past couple of years has been focusing on building up 5G infrastructure, but because of the issues that Western allies, particularly Australia, the US and the UK have had with Huawei, a lot of nations have been looking inwards when it comes to building up their network infrastructure, which means Nokia has lost out. Not just Nokia, also their Swedish rival Ericsson. They just announced last week that they were going to be axing 8,000 jobs, and it's for a similar reason. They updated their shareholders, showing that profits have plunged there too. So yeah, not great. Just as we're getting to Christmas, more jobs being cut in the corporate world.
Yeah, and still, I'm talking about Christmas, a time when people want to relax. Over there in the UK, Netflix is asking that you guys will pay more. And also back again to the news is the issue of password sharing on Netflix.
Yeah, that's absolutely right. Netflix have had a really extraordinary 24 hours, actually. In fact, their shares on Wall Street late trading was up 12.2%, and that's because the LA-based streaming giant has announced that in the 3 months to September, they have added a whopping 9 million more households to the subscription service. This is very good for Netflix because, of course, they did exceptionally well during the pandemic when people were locked up in their homes and were looking for something to do. But of course, it then became very competitive. So we saw the likes of Discovery, Disney Plus getting into the market, taking a big chunk of their consumers. Lots of investors were pretty afraid because they didn't know whether Netflix did have a future. But clearly, looking at the Q3 results, they do. A lot of headlines this morning are not talking about their bottom line, which is the numbers and their market cap. They're talking about the fact that they are going to be increasing prices. And quite rightly, you said they are going to be doing it in the UK. I believe if you've got a basic plan, you pay probably about £6 or £5.99 per month. That's going to be hiked up by £1, although it's not just in the UK we're going to be seeing this. This is also going to be an increase across France, Europe, and in America. But yeah, so it's a good thing for Netflix that they're doing incredibly well, especially because of the backdrop of the writers' strike in the US, which I believe did stop production on some of their most popular shows. But look, they're making money, and they want to make more money from consumers if we enjoy using the service.
Well, I hope they don't lose consumers in the process. Some people might just say, this is out of my budget, right, and it's not priority. Well, we'll see how consumers react to it.
Yes, you're right.
All right, Juliana, we'll talk to you at 1:30 then. Okay, let's go to the crypto space now, the market that never sleeps.
Right.
And I think a major market mover is in the news again.
Talking about your Netflix subscription, I hope they don't increase prices here in Nigeria.
Well, I didn't see Africa, and I hope
not there.
I think perhaps they are testing the waters. If they test the waters in Europe and the UK, they might just come to Nigeria. I mean, if
we have a cost of living crisis here, I don't think we need.
They have in the UK too.
Right
they
now.
Have in Europe. It's everywhere. So
anyway, I'm going to jump on your subscription if they do that.
No sharing of passwords.
No sharing of passwords. Oh my goodness. Well, that's what we have to go through now. But let's look at the crypto space now. Let's look at the color for the crypto space. I'm talking about the color, either red or green. We know this morning is quite red right now in this market. We're seeing huge pockets of red and just a few green pockets there, talking about the sentiment in the market. All right, Bitcoin there holding $28,328, down 1.35%. Ethereum, $1,552 there, down 1.36%. So we're seeing big drops across board right there in the crypto space. Binance there, that's the native token for the Binance exchange. That's $209, down 1.59%. So we're seeing almost 2% drops right now with Cardano at 24 cents, 1.75%. That XRP losing that 50 cents level. It's maintained that level for a while now, but it's lost it, 48 cents, 1.62%. So we're seeing huge drawdowns right there in the crypto space. Let's look at the top gainers counter now. Let's see who's topping that. We see BSV there, Bitcoin SV, topping the counter, $42.28. Did break that $40 resistance there. So investors are expecting more upside potential after breaking a tough resistance of $40, 6.47% up. And Mantle, also on the top gainers counter, 32 cents, up 2.61%. So let's bring in Rumeofi now. We see Elon Musk back in the news again, like he never left, maintaining Tesla's Bitcoin holding. Let's bring in Rumeofi now, financial market analyst. Great to have you, Rume. Good morning.
Good morning, Laddie. Good morning.
Yeah, so we see Elon always in the news, and I believe we have a song about Elon right here in Nigeria, talking about all these Elon Musk boys, but he's back in the news again as usual. And Tesla has again opted to maintain its Bitcoin holdings, marking the 5th consecutive quarter without any changes. What are you seeing here?
I think, Laddie, I must tell you, Elon Musk should be called the real Bitcoin maxi right here, because he has been holding it really strong. At some point, we know that Tesla was holding about $1.5 billion in their balance sheet for Bitcoin, and because of certain concerns, he had to sell about 75% of their holdings in their balance sheet because of environmental concerns, really. So, but now having very good amount, I think about 9,720 Bitcoin in their balance sheet, which is also very significant amount to hold as a company. I think they are the third largest company holding Bitcoin. It is very, very good coming from him. He believes in the technology, he believes in the future of payment, and he believes in money. So to say, all of these things are very, very well for someone of his caliber, giving very huge backings to the industry. But eventually we might see him going back again because some of those concerns have been actually attended to, and hopefully not a financial advice, but if the world richest man, for example, is getting into Bitcoin, so I could wonder what some other innovators are looking at.
Right, and definitely I know some investors, like to swim with the whales. That's a strategy for some investors. So if we hear news that Elon has offloaded some Bitcoin, do you think investors should follow that?
So the truth is, a couple of persons actually has seen Elon Musk as a signal to get into the market. But if you ask me, that is not coming from a standpoint of knowledge. The truth is that the technology has come to stay. What I would advise certain persons to do is to read the Bitcoin white paper, which is very, very important. You need to understand the nitty-gritty, the fundamentals, what makes this really unique from the traditional financial system. So, but for those that don't know, it could serve, that don't understand the space, it could serve as influence for them to do certain things, but I don't think it's a good thing to do, because a couple of persons got themselves burnt, their hand burnt, if you ask me, from the Dogecoin influence that he got into, and it's not really a funny thing at the end of the day.
Right, and now let's look at geopolitics. Now it's still on the front burner right now. Talk to me about the role of Bitcoin in all of this. We're seeing more with the Israel-Hamas conflict. We're still not done with Russia-Ukraine, and we did see Bitcoin play a role in the Russia-Ukraine war. What are you seeing for this Israel-Hamas war?
Yeah, so we've gotten a report over time that they've actually been donations from to the Hamas guys, the terrorist group controlling Gaza, to finance this war, and it has been figured out. Like I usually tell people here in Nigeria, the truth is, if you're trying to commit crime using cryptocurrencies like Bitcoin and if a couple of others, you're just making a mess of yourself, because you could be caught. So it is a very a transparent system. It's an open ledger that can be checked, and they've seen that certain transactions have moved over time. I think about from 2021, 2023. They've been donations from about 60 to about 93 million in dollars. So, but traditional media is making it look like, oh, crypto is a bad thing because of all of these. But we've seen how exchange platforms like Binance came to play a role in all of these to make sure that those monies were seized by the Israeli authorities, and also certain accounts have been flagged. So kudos to some of these things. It makes it really clear that certain things that have happened that are not good, they've been captured at the end of the day. But it now goes back to intelligence at some point. If some of this information were out there earlier, I believe the Israeli authorities would have prepared themselves a bit better than what turns out at the end of the day with the attack.
Definitely, that came with a lot of help from centralized exchanges. Do you think decentralized exchanges can do anything, to flag, such bad actors?
So with forensic establishment like Chainalysis and the likes, so when certain amounts, huge amount moves on the Bitcoin blockchain, they have their software, their tools to see all of those things moving from one point to the other. So this can be telltale signs to what is going on out there. And you've seen certain things that have happened from countries like Iran and some other, even crypto hacks that have happened in the world that have been traced to North Korea with their Lazarus hackers and everything. All of these are made possible through some of those tools, be it centralized or decentralized platforms. You can see the movement, and the idea is, at the end of the day, when some of these monies move, there will always be a point where the bad actors want to flip it for cash. That is where some of the policies that are being implemented in the world today, for example, like travel rule comes in, where exchange platforms can share information on where it goes to. Even if you are using decentralized exchange platforms, at some point, some of this money will move, a proceed of them is going to move to centralized exchange platforms.
All right, talk to me quickly now about price action. What are you expecting, going into the weekend? We're seeing a drawback, right now after the, shall I call it a scam pump with that ETF spoof news there, popping Bitcoin to about 30,000. What are you expecting for the weekend?
The truth is that let's take advice of Warren Buffett. When everybody's excited, be worried, and when everybody's worried, be excited.
Right. Good words there. Thank you so much, Rumi Ofi. It was great having your perspective. Thank you.
Thank you very much, Laddie.
All right. So, Ini, there you have it. Where you say excitement, run.
I thought you embrace excitement. Why
I guess you have to run away.
Depends on the kind of excitement.
Exactly.
Anyway.
Yeah.
All right, Laddie, thank you so much. See you at 1:30.
See you.
So that's it on the program today. Thank you so much for being a part of this 55 minutes of current and relevant business talk. Fortunately, we had a lot of not so good news for Nigerians, but it's our reality, and we need to face it, and we need to get out of it by ourselves. So let's do everything in our little corner to handle the economic issues we have in the country. But remember, you can watch Business Morning at any time on our YouTube channel, youtube.com/channelsweb, then look for Business Morning, and then you watch it at any time. Maybe you need to hear that information again. I'm Ini John Mekwa, and have a good day. Bye-bye.